and let's invite our next management on the show now. We're going to speak with the management of Lemon Tree Hotels. Now, the entire hotel space really has been in focus with the G20 Summit just concluding. To top that off, you also have the Cricket World Cup and the wedding season that we're looking forward to. So this entire space has been buzzing. Lemon Tree, by the way, also recently signed a license pack for a new hotel that they're looking at in Dehradun. So we have the chairman and managing director of Lemon Tree Hotels, Patanjali Keswani, joining us on the show now. Mr. Keswani, thanks a lot for joining us today on the show. This is Pavitra. For starters, if we can just, begin by talking about the fact that with all of these, big events, we just had the G20, the wedding season is coming up as well. Can you take us through what is the kind of average room rate right now? How much has it gone up and how much you see it going up as well? I think the last time we spoke, it was around 5,400.
Yeah, so, hi, good morning, Pavitra. So, see, G20 is a one-off event. So during that period, obviously, room rates went up in those cities where the delegates book rooms. Overall, the rates in September typically are marginally over the same quarter previous year. So I would say the rates are up between 7%. As far as occupancy goes, as a company, we've been focusing on increasing our occupancy in H1 because, as you know, H1 is the seasonally weak half year and Q2 is the seasonally weakest quarter of the year. But it's been pretty good for us. We have done better than Q1 and we see Q3 and Q4 as significantly better in both pricing and demand. Plus, of course, we are opening a very large owned hotel, which is in Bombay, which will occur in October. So overall, things are looking very positive for us and actually for the whole industry.
So if I can just look at it for the full year, could you give us some sense of what the pricing could be like for the full year? The last time we spoke to you in Q1, you said it was 52.37. So if you could tell us what the pricing will look like for the full year and also for occupancies, I think you said you're trying to get to around 73 to 74%, right?
Correct. So for the full year, certainly we would look north of 73, 74 as a company. In Q2, we would look at achieving something like 72, 73% occupancy and a hike in price too, compared to the previous year, same quarter. Overall, it's difficult for me to give you a specific answer, but I would say that we would look at an average overall price increase of north of 10%, perhaps closer to 12 to 15% vis-a-vis the previous year, and an increase in occupancy too.
Mr. Keswani, will Q2, Q3 of this year be much stronger compared to the other Q2, Q3s just because of the G20 and the upcoming Cricket World Cup?
So Q2 will be stronger than the previous year, same quarter. But you have to understand G20 specifically benefited those hotels which got delegates, and those hotels were mostly five-star luxury hotels, because delegates did not stay in the rest of the hotel sector. So, for example, the heads of state missions all stayed in the five-star deluxe hotels in Delhi. So while there was a spillover effect, obviously, to the other hotels, overall, that was a one-off event. So while it added to, to occupancy and rate, that was only for 3 days. Otherwise, overall, what I'm seeing is that the rate of growth of demand is higher than the rate of growth of supply. And therefore, obviously, both pricing and occupancy will go up. And this will continue for the next 4 years.
And any particular insights on demand due to the World Cup?
Oh, yes. That is, again, wherever the World Cup occurs, we are such a cricket-loving nation that demand goes through the roof. So both airline rates and hotel rates also go through the roof.
No, so is there a way to tell us, what could be the net benefit to your company in Q2 and Q3 just because of the spillover of G20 and the World Cup? What could be that one-time benefit?
It would be, say, a couple of percentage points on revenue for that quarter.
Okay, all right, got that. Sir, I also want to talk to you about your new licensing agreements. I think there were 2 announced in just the last month or so. Can you tell us how much, this adds to you in terms of the number of keys, and what is it that you expect for the rest of the year as well?
So here, currently, we operate about 8,600 rooms and about 92 hotels. And of that, the majority is owned by us. Now, if you look at our current pipeline, we have another 4,100 rooms, of which about 20% is owned by us and the balance will be managed by us, which will open in the next 2 to 3 years. So basically, we should cross 12,500 rooms in the next 2.5 years. So that is the current snapshot. But we keep signing new hotels. So as a matter of fact, while I'm sitting with you, we are going to be signing 2 hotels today. And so we are signing hotels at an accelerating pace. So my broad estimate is that within the next 2 to 3 years, we should operate or have signed and operate more than 20,000 rooms, which should give us some kind of supply dominance in the branded mid-market space.
All right, got that. Mr. Keswani, we are going to leave it at that today. Very interesting to have this chat with you, and we do hope to have you back on the show very soon. That is the management of Lemon Tree Hotels talking to us about their plans from here on, what the occupancy has looked like as well. And they're actually saying that it could go up and it will be north of 73-74%, which is what they earlier mentioned to us in terms of just the occupancy level. But with that, we do need to take a short break.